Now that we went over paper assets like stocks and hard assets like real estate, let's talk about protectionary assets. An example of this would be investing in something like physical gold. Because when you're investing in gold, you're not hoping that this gold goes out and creates more value like you would a stock. Because when you invest in Amazon, you're hoping Amazon's going to create a whole new product, make bigger profits, and grow their valuation because it's a more valuable company. When you invest in gold, that gold just sits there and looks back at you. It doesn't really do anything. Now sure, there are some practical uses for gold in the world, but that gold that you have sitting in a vault, if you're investing in gold, or sitting in your drawer, or sitting in your basement, it's not doing anything. It's just sitting there. And so the goal for the gold is that it is a protectionary asset against a worst case scenario situation. I'm just telling you what I do. When I invest in physical gold, I buy a little bit of gold every single month. I look at it as a way of saving hard money, kind of like hard dollars, hard money. So I look at it as a way to save hard money. And we know that gold has been a currency since the beginning of time, essentially. And so it has been a universal money around the world. And so for me, it is like that type of insurance, a doomsday insurance and a way to save hard money. That's why I call it a protectionary asset more than anything else. It's a very small, tiny piece of my portfolio, just in case, worst case scenario. And for all of you financial nerds, you might find this interesting, but my family is from a state in India called Punjab. And in the Indian culture, it is very normal that when you get cash, or there is rupees, when you get this cash, you convert this cash to something like gold because there's really high inflation over there. And so it's just normal culture that when you have a lot of cash, you don't want to keep the cash because you know this cash is going to lose its buying power. So many people just naturally convert it to gold. It's not really considered financial education. It's just normal because that's the culture over there.